Javier,
Hey,
we meet again at a Benzinga event. Great to be here.
Tim Seymour over here, CMBC, Seymour Asset Management, a good friend of Benzinga, and a great friend of Benzinga Cannabis.
These events keep growing in size and stature and importance. I think there's a lot of big news, dare I say, I think in the midst of what's going on in the sector, and I think that a lot of those people are actually in this room.
You were mentioning you're excited about M&A in the sector.
Yeah.
Let's talk about it.
The public markets and the private markets operate differently, and I would say, frankly, half the people here are much more focused on private markets. The public markets have been kind of the currency in which a lot of these companies on the private side have actually seen acquisitions, and so it's effectively they're intertwined. The sense that I'm seeing, and we've seen this in the last couple months where there's been a couple big acquisitions. There's been the Cresco Origin House.
Yeah.
There's been a lot of M&A. There's been the Verano deal. I think the bigger deals are coming, and I think the Canadians, once they can figure out how to execute a transaction in the U.S. where they can actually buy assets and still not violate the federal dynamics, and therefore maintain their listings in the U.S. And I think ultimately right now this is a game for the lawyers, and I think there's going to be some transactions coming up that indicate that we're getting to a new era where I think you're going to see a lot of the bigger boys trying to consolidate the sector, and I think it's exciting. I think for investors, there's going to be opportunities to really see some proper differentiation instead of the entire asset class trading in one direction, up or down. I think you're actually going to see some outperforming on the basis of them being companies that are true operators, and either might be targets for a proper acquirer, or there's you're just getting a bit of a shakeout, and so relative value rather than one tide taking all boats or dropping them down is important.
Definitely. So you said you were excited, or at least you could predict some big deals coming ahead. Any specifics you can share?
I think if you talk to the folks in Canada, for example, I think the sense is that there's some urgency to take the next step in their leadership position in terms of the footprint. And I think it's not surprising that multi-billion-dollar companies are in a better position to make those moves. So I just, like you saw Aurora file a $750 million shelf registration 10 days ago.
Just in case.
So just in case. So I don't think it's terribly crystal ball to say that I think the Canadian guys are coming, and I think they're coming for U.S. strategic partners that make sense. Some of them might be some of the bigger guys. Some of them might be some of the smaller single state operators or smaller MSOs that I think frankly offer a lot more value and may be better places to go.
So the other thing you mentioned is you see public and private markets very intertwined, and I understand why you say that. A lot of these public companies are using their highly valued stocks to make acquisitions. Now, many investors in the space, I've heard them say, the value right now is in private companies in the private sphere. But you see them very intertwined. Are you bullish on public markets? How do you feel about public markets and valuations?
I do think that the valuations are going to come down, and I think that the relative value trade still favors the U.S. over Canada in the public markets. I think the private markets have been more discriminating even than the public markets on capital. So, if you look at companies that might have been trading at 7 or 8 times revenues or next year's revenues last year, they're trading in the private market, or if you're trying to raise money in the private market right now, you're going to be held to a standard that might be 4 or 5 times, or 3 or 4 times. There's a couple well-known brands that are established that I know have been out raising money, people I've been talking to, and where they might have raised at 5 times, they're going to try to raise it 2.5 or 3 times. Ultimately, it's a good thing. The markets are becoming more sophisticated, more discriminating. I think the size of the institutional players, we're the 2 only guys in here wearing ties, except for the handful of other big institutional guys that I think seem to be more present at these events, and clearly I think that's indicative at Benzinga's events. GMP had a big event yesterday. You're seeing the consumer analyst from a Fidelity is coming in to look at the CPG story, the distribution story, the procurement story of this industry in the same way they're looking at it in apparel and in athleisure.
You said valuations,
Yeah.
right? You
Yeah.
said valuations will come down. You think valuations will come down because fundamentals will catch up, or because stock prices will fall?
Yeah, that's fair. I think valuations are coming down to meet realistic expectations for the future, even in an industry with unbridled growth expectations. So there you go. I mean, it's a nice way of saying I think we got a little too frothy. And to be clear, if global markets take a significant downturn, this market is going to experience serious duress. You can't assume that a high risk investment and something that's farther out on the risk curve than investing in even my background in emerging markets, or the fact that capital's been free, volatility is I don't want to get too wonky on this, but with the VIX at 12, cannabis stocks look pretty interesting. People are grabbing risk, and I think if that changes, that's going to throw all multiples out the window.
I mean, there's correlation. You can. This is not an investment with no correlation with the markets. This is not reinsurance, for instance, or whatever.
That's right.
It's an asset
No,
class.
I
like
think
any other. You mentioned in many other occasions, it's like any other emerging asset class.
It really is, and the good news is that companies are being held to higher standards. It's a more sophisticated approach. We're, to use the baseball analogy, I don't know what inning we're in, but it's not the first inning anymore. It's definitely. I'm in Canada. I should be using the hockey analogy. We're skating to where the puck is going. But ultimately, you have this case where I just think that capital is not without a price, and the guys that have been in this industry, our panel this afternoon was full of 4 really serious investors and experienced investors who are not paying the same price for assets that they did 2 years ago. That's not a bad thing for everybody.
Oh no, it is not.
So anyway, it's a pleasure to be here, Javier. Congrats, and I'm glad they got us some nice, comfortable chairs to sit in this year. So we'll see you soon.
Thank you for joining us.
Okay.
It's always a pleasure.
Thank you.